I think India is in a much better position than many economists, if not most economists in the world, to start talking about withdrawing stimulus measures. But I do think it is very important to proceed very cautiously, and there's no doubt that's what the government will do. The amount of stimulus that's been put into the global economy is unprecedented, and much of the growth is attributable directly to that. So as we withdraw that, we may see reductions in growth globally. So we need to be careful, but India is in a much better position than pretty well any other country in the world on this.
But if those stimulus measures were indeed to go, which would the sectors be that would be most impacted by that?
Well, I think areas that I don't expect the government to withdraw stimulus, if you put it in the stimulus category, is supporting the rural economy. And I think the focus of the government on the rural economy is clearly important politically, and it's actually important economically. So I'm sure they will do nothing to damage that sector. They will also be very concerned to continue to support infrastructure. So when you start looking at the sectors that are benefited, then you worry about withdrawing any stimulus, because the growth in all these sectors is so important. But I think it's a question of seeing the Reserve Bank already started moving back to status quo ante. I think we will see interest rates start moving up in the first quarter of next year.
So what you're saying essentially is that when the RBI does a quarterly review of its monetary policy in January, you would expect hardening of interest rates?
I would. I think that's the consensus view, and our economists at Bank of America Merrill Lynch believe that as well.
We'll just talk about India for a few more minutes. What are the sectors presently that excite you in this country, and how do you see equity markets will fare from here on? There's been some sort of a correction in the last 1 week, but how do you actually see markets fare from here?
The markets have had a very good run since sort of March, April. You can't expect markets to continue to go at that pace. So I think I would be cautious over the next period, particularly against the backdrop, as we've discussed, interest rate hardening and continued global challenges that will affect not the appetite of foreign investors to come to India, but their ability to come to India. That may be challenged as we move into the year end as well. So I'm not expecting the equity markets to move forward aggressively from this point for a period, and that's probably good for India as well, to have a stable period. The India structural story is so much more positive than nearly any country in the world. I mean, I'm very positive about the balance of the Indian economy, in contrast to so many economies in the world. And therefore it makes sense to begin to adjust those extreme measures. The measures in India were not as extreme as in many countries, of course. So not affected remotely in the degree to which they were elsewhere. So the RBI does not have to do much to get back on track. But I am sure that they will be proceeding cautiously even from here, because one of the big impacts of interest rate policy is exchange rate policy, and I think exchange rate movements, volatility of exchange rate movements are quite likely to remain a major policy risk. The consensus view is that the dollar is on the weak side, which is no surprise given the amount of liquidity that has been generated in dollars and the slower growth rate in the US exactly. And that's a big factor for so many asset classes in the world.
That's a very contemporary thing, that's not really a historical trend, because dollar movements generally, FX in India is generally determined by the dollar's movement downside, rather than the Indian currency.
One of the challenges with India, for India, is that it's affected indirectly on things. I mean, I think that's true on the exchange rate, because if you look at the economy is not the most open in the world. So you're right, it's affected indirectly, but indirect effects are very important as well, because the dollar movement will affect asset prices in so many categories. I mean, the favorite asset in India is gold. And gold is typically priced, other than in India, in dollars. I mean, I always look at the India gold price and have to reconvert it back to dollars to see where I am when I see it quoted in rupees.
We've also just enhanced our efforts to buying gold from
Exactly.
What kind of strategy you have for the India, especially Bank of America, and what is your view on government policy as far as liberalizing foreign bank licenses?
Well, our policy for Bank of America Merrill Lynch is very simple. We've got two very strong companies that in DSP Merrill Lynch, which has been a very successful investment bank in India for many years, and Bank of America, which has been in India since 1964. And we have 5 branches in Bank of America. We do not at this point need more branches. We have a lot of work to do to make the most of what we've already been given historically by the RBI. So we're bringing together, my job is to bring together these two businesses for the benefit of clients in India, and the clients